Hello and welcome to BBD, the Business and Banking Dialogue Show, your one-stop show which brings to you day after day a topic of interest. Today is again no different. Today's topic is all about DeFi, DeFi, that is decentralized finance. It's a hot topic and it's going to be rocking today with the guests that we have today. Decentralized finance. Is a hot topic, as I said, in the world of finance, particularly in the crypto space. The fault lines in the current industrial age financial system are beginning to be visible. There is a shift towards decentralized finance, finance which is suited to the current networked age of today. Today's age is all about networking. So, what is DeFi and how is it expected to change our lifestyle when it gets adopted? I'm your host KK, and I bring this show to you live across to you via EPS social media channels, YouTube, LinkedIn, Twitter, and Facebook. So, welcome to the Business and Banking Dialogue Show. With me today is a very, very experienced banker, author, strategist, and thought provoker, Mr. Mrutyunjay Mahapatra. You will see a brief about him. A senior banker, till recently CEO of a large PSU bank, and is credited with an all-round transformation of the bank. Member of the Insurance Advisory Council of India. In the past, he headed the global strategy, payments, transactions and transformation programs of State Bank of India, the largest public sector bank in India, as its head of strategy and chief digital officer. He was also the CIO of the bank and has been a leader in the many transformation initiatives of the State Bank of India. Sir, good afternoon to you. Mr. Mahapatra, good afternoon.
Yeah, good afternoon. Good afternoon, KK. Always a pleasure to be back here on this platform.
Thank you, sir. Sir, to set the perspective to this discussion, kindly let us know what is DeFi, why DeFi, what's missing in the traditional finance that is today, and what's its importance in the current environment?
Okay, thank you. Before we dive into the subject, I think especially on this subject and more on this kind of a show, I think a disclaimer is that as a speaker, I have got the pedestal, but I am also a student of this subject as much as probably your listeners are. I grabbed the opportunity when your team requested it and told to speak about it because this is such a fascinating subject, and more so as someone who is interested in new age technology, I have dabbled with a little bit of blockchain, and when I learned that this could be a subject of discussion in the business banking dialogue, which aims to make whoever are the listeners into better professionals, I thought that I will grab this opportunity. So the first disclaimer is that I am not an expert in this subject. I am as much a student as all of you are. So I might commit the mistake of half-baked knowledge being given to you. So please bear with me. But the aim is not educating any one of you, but opening this smoke screen that you may on this fascinating subject and provoking you to read more and understand a little more and get a little prepared if and when this decentralized finance comes into being. Now, coming back to your question, what is decentralized finance? Now, we will speak about the various aspects of decentralized finance, but a simple explanation of decentralized finance will not be clear unless we understand what is centralized finance. Because decentralized, if you break the word into two, decentralized, that is uncentralized or against centralization. Over a period of time, today, probably going forward, we will try to explain how money came to be centralized. Today, every finance or finance-related technology is highly, highly centralized. As a result, the things are not only expensive, they have become complex, cumbersome, not available to people. That is all the ailments of monopoly. Monopoly is a distributed monopoly, not that only one or two players are there. Let us take, for example, banks.
Yes.
Banks have the terrific ability of centralizing three functions onto them. The first one is collecting deposits, second one is giving loans, and third one is taking money from one place to another, which you may call remittance or payment or whatever. Similarly, there is centralization in many fields. There is centralization of identification with Unique ID Authority of India, the centralization of the payment switch with NPCI, the stock market is completely centralized with the two stock exchanges that we have. The registry, that is the property data, is centralized with the government. So anything that is to do with money, finance, and wealth today is exceptionally centralized. And as a result, the main aim of the wealth as something which is available to the enterprising, available to the creators of value, is getting very skewed and distributed in an uneven manner. The response to this is a technology-based thing, which we call decentralized finance. Decentralized, as I told you just now, everything must be federated. Let us say collection of deposits. It is not necessary that somebody has to be a bank or an authorized entity or a licensed entity to get the deposit of people and give them the money back. Similarly, tokenization, how to bring the traditional functions of finance by reducing cost, improving efficiency, and making it available to anybody and everybody. This is what, in sum, is decentralized finance as an introduction to the subject.
Thank you. Thank you so much. Thanks for the great introduction. I'm sure participants have understood the new concept of DeFi. So, anything to have come in, there must be something wrong or something amiss in the current scenario. So, what's missing in the traditional finance that you need a DeFi?
Yeah, as I told you, what is missing today is that the functions have become too proprietary. Let us say even something like a AWS or Microsoft Azure.
Yeah.
Everybody needs to, or for that matter, in the what we call that decentralized finance is anchored on something called Web 3.0. Web 3.0 is distribution of the intelligence that is inherent in the web to everybody. Everybody can take that intelligence based on the data set or the data rights that they have, and they can use it to get more beneficial ecosystem in place. So what is lacking today in this is that, probably loans are not available even if you have collateral. Loans are not available. How to do collateralization of your requirements? Of course, as we will go forward, currently the entire decentralized finance is constructed around the concept of developed market banking or developed market financial exchanges. But time is not far away when these concepts will get appropriately customized and will come to our own markets. So it is very important to understand that we are missing complete, the initiative that was taken by the current government, probably 10 years, probably 6 years back, when the Jan Dhan account and the financial inclusion was taken.
Yeah.
Probably this is at the upper end, making, not just giving a basic finance or basic transaction account to rank and file, but making all the functions of finance available to people with simple interfaces and simple exchanges, and reducing the cost and improving the efficiency, not making it, I was reading recently another article in which it was told that if we take payment, for example, payments typically take between, if it is an overseas payment, it takes 6 to 8 days to come. That means banks take that much of float, they keep it, and a Western Union or a PayPal, they charge upwards of 10 to 15% to take that money. And everywhere there is investment in technology, which is, it is not that for everything customer pays. Sometimes society as a whole pays. So these are the deficiencies which the decentralized finance is trying to address.
Thank you, sir. So you did talk about centralization already happening. Exceptional centralization has happened in the identification, stock market, tax, property registry, etc. Okay. So what are the indicators that signal to you that the rise of decentralized finance is unavoidable?
There are quite a few indicators. One is the readiness of the system. That is because computing power is required. Common protocol is required. That is, everybody knows what we are seeing is the standardization of the processes. For example, every state government need not have different processes of registering your title deeds. Similarly, on the initiative of the government and the Reserve Bank of India, 90% of the common banking has been put to some kind of a standard customer journey. It's not necessary that you go and see completely different types of account statement in a Citibank or an HDFC Bank or a State Bank of India or a Canara Bank. So once the customer journey and the processes are simplified and put into standard mode, a great ecosystem is ready for decentralized finance. Because similarly, let us say a loan appraisal process, the process of giving loans, that is also pretty much standard now. What are the documents that are required? What are the KYC process that is required? That is also there. Similarly, the other functions, like let us say the authentication or identity verification, which is so crucial for delivering a system of payment or system of authentication, that also is getting. So blockchain or the Ethereum or whatever are the platforms that are giving these decentralized finance, they depend on agreed protocols. Agreed protocol is one of the key tenets. And I am seeing symptoms everywhere that once this standardization goes and this customized or the unique experience of a bank gets converted, more and more services will migrate towards a decentralized platform, which is essentially open source and open protocol.
Thank you, sir. So if you were to take I'm sure participants, would be thinking, this looks great, but how does it, what's in it for me is the question that, everyone would want to ask. So let's take an example, sir. So I want to take a loan of 100,000 rupees from, let's say, State Bank of India. So how does DeFi help me?
No, there are, I think we will come to the details of how it will be done. Only thing is
Okay.
that State Bank of India today, the bankers have to be facilitators, as Mr. Nandan Nilekani often tells. The
Yes.
bankers will be stopping their traditional functions and will be earning the net interest margin as the major income source will get
Source.
replaced by data and what we call facilitation functions.
Yeah.
You banking as a service, the
Yes.
component, the banks will be completely put into components, and each component will
Yeah.
be dished out as a service. And the fee income from those service,
Yeah.
let us say authentication is a service. And
Yes.
going to decentralized finance, when probably we will come, I'll try to tell. Each of the property has to be tokenized into a value, and if these tokens are pegged to a particular currency, let us say Indian rupee, and
Yes.
if every token or every ether or every Bitcoin has a token value, let us say you have converted some of your assets into tokens, where in Bitcoin terminology it has the value of 1 lakh Bitcoins, then probably 75,000 will be available for borrowing from any organization, and the players have to come on the same platform. So State Bank of India, if it has lendable money, then those lendable money also
Mhm.
will have to come to the same platform. And if both sides could lend without knowing, for example, if State Bank of India is offering at X interest rate, it is no different from uh, somebody else who may be an individual like KK, who is on the same platform, who is offering at X minus 0.1%. So money will lose
Mhm.
its color. Money will not be, it will be completely decentralized money. So decentralized money meaning the source is immaterial, and this will be, the user or the lender are only interested in terms of security, protocols, and returns.
Yes.
So protocols will ensure compliance. Security will ensure enforcement of the contract wherever it is required. And return is, of course, basic to any economic activity. That is how it will work.
Right, sir. Thank you. Thank you for a very good explanation. Ladies and gentlemen, I hope you're getting the concept of a decentralized or finance. Okay, something that is we are going to witness in the days to come, and it's inevitable. That will happen sooner or later. When, we do not know. So it will happen. But I think Mr. Mahapatra has very clearly put the what it means, how it helps, and what is the underlying technologies that are there. Uh, Considering that this topic is of great interest and there are a lot of bankers in the audience, I'm opening up the Q&A box so that we can get as many questions as possible across to Mr. Mahapatra, and he will try to answer to the best of his knowledge whatever is available to him. It is known in the domains that he has talked about. So the decentralized finance connotes money reimagined. Hence, before we deep dive in DeFi, we already are actually, we have gone into some part of DeFi already. Can you briefly explain us the how, from an evolution of money, as this particular decentralized finance is coming into?
Yeah, I think it's very important to understand how money has
Yeah.
evolved. In fact, last time I told your listeners that how bookkeeping came
Yes.
when borrowers couldn't be chased, so bookkeeping came. So I think better I display a slide which will give you some amount of you know some amount of
Sure.
clarity on how money came into being.
Okay. Sure.
So can you see this slide?
Yes, sir. We can see very clearly.
Okay. So just to take you back the memory lane, first is, the evolution of money happened through, I have a cow, so I'll give you the cow and you give me a few goats, or you give me a house, or I'll give you 10 cows. And that is how in the ancient world, animals which were immediately usable and
Yeah.
and connoted value were used as money. I have
Yes.
500 cows, you have 100 horses, or something, or pigs, or for that matter, So that is how it started. Later
Yeah.
on, when mining activity started, it went and it became the gold standard, where how much gold you have, determined personal and community wealth. After that, coins were introduced, which followed with paper money backed by gold reserves. And after that, past Bretton Woods, USD came as a standard, and USD was supposed to be pegged to gold. And for those of you who are interested, evolution of money, I have a video in my YouTube channel. You can have a
Mhm.
look. And in that, how plastic and electronic money gradually replaced paper money. And in probably India is ahead in terms of electronic and plastic cards usage as compared to paper money. So
Yeah.
this is how it evolved. And now the way is that another, like, when paper money came, the common confusion in the society is that what is the wealth behind it? How do you know it is the money? The
Yeah.
same confusion today is with bitcoins. When I
Yeah.
took, when I was addressing SBI seniors at very senior level, that is the CGMs and deputy managing directors in one of the leadership conclave in Kolkata, the common question was that where does this Bitcoin came, and who funds that Bitcoin? The same question: where is the
Mhm.
paper money, and how the paper money's worth initially was determined by the amount of gold that the nation holds. But later on,
Yeah.
it was completely delinked. The same thing will happen. Bitcoin today is like you are going and solving a problem, and the system, which has the maximum capability of generating 21 million Bitcoins or whatever,
Mhm.
rewards you with a Bitcoin.
Yeah.
So the money and as a store of value, and the value to be extracted in different forms is essentially at the source of evolution of money, unlinked to uh, anything specifically known as valuable. It may be, if I need 100 rupees today to meet my mother's treatment, then that 100 rupees I can borrow by paying 20 rupees upfront interest. Whereas if I don't need money, this 100 rupees, for taking the 100 rupees like the Japanese banks, I'll say that give me 102 and I'll refund you 100. So money as a store of value, as a utilization value, both needs to be understood clearly in order to find out that what is the evolution of money. But basically,
Mhm.
it evolved like this.
Okay. That's very good explanation, sir. And thank you for putting up that slide. I think that kind of gave us a pictorial view of how money has evolved right from the barter time to what we are going to see as the last part of it, the Bitcoin's currency symbol that Sir. So, ladies and gentlemen, look forward to your questions. If you want to ask a question directly to Mr. Mahapatra, you can also do that. So, the decentralized finance promises to assure the resistance of a global finance democracy. Tell us how will it work, and how will it radically redefine working models in the banking and capital markets?
Okay, I think in the interest of simplicity, Again, I'll tell that decentralized finance, I think, why not I show one of the slides,
Sure, sir.
and
Yeah.
so that it will become clearer. And essentially, decentralized finance is you are able to see this?
Yes, absolutely.
What is DeFi? Okay. It is a series of projects which has been built on a blockchain platform. It is open, it is inclusive, it is transparent. And as I told you, the basic of this is intelligence of the web. The web 2.0, as we know, the centralization of the AI and the ML is likely to be decentralized and unleashed to the users of internet. So the D apps or the smart apps, as we call it, these are interacting smart contracts. And what are smart contracts? Smart contracts are nothing but digital protocols which tell us that how on a particular trigger or on a particular event, how the software will program itself and work with the interfaces to execute a particular thing. Let us say that the common thing that could be translated into this, that there are 500 buyers who are trying to buy TCS stocks. And these buyers each now log into the Bombay Stock Exchange or through their broker and try to give a price. And these prices will get will get registered in the same platform. And when the price trigger is achieved, the trade will be executed. Now, it is not quite uncommon that when you find that somebody is buying at the rate of 280, when somebody is buying at the rate of 279, or somebody is buying at the rate of 275. Now, if it is on a D apps or a DeFi kind of a platform, when everybody is logged in and the most optimized, and if the smart contract says that whatever is the maximum value you purchase at that price, then probably the transparency of the system will show that the common person, through this decentralized application based on pre-programming interfaces, you may say that yes, 279, even if it is minimum or it is maximum, you please execute my contract. You can say that no, whatever is the maximum, you do it. You can say, you can set a minimum. You can set a minimum and a maximum rule. Whatever you want, you don't have to go through various things. And there are, need to know, if you trade only for 3 or 4 times a day, then probably you will need a different program. So it is called a block of Legos, like a Lego. You can take 6 Legos and manufacture a disk, manufacture a table. You can take 20 Legos and manufacture a skyscraper. You can have 200 Legos and do a bunch of skyscraper, road and plants, etc. So like a block of Lego, the basic elements are available, and these are available across. You can choose these pieces from different makes, and the governance will be done through a protocol. So essentially what we are looking at is that the Bitcoin basics must be understood by people. So as of now, probably people have to understand a little bit of blockchain concept, but going forward, when the Bitcoin basics are known to the aggregators and the intermediaries and the players, then people will start trusting it. Today, when I go to the bank, I do not understand much as to what program is getting executed at the back end to pay me interest. Whether it is multiplying by the number of days, dividing by 360 or dividing by 365, what is the compound interest formula? what is the automatic renewal. Those things, once it gets clear, then we will be able to take this, scale this up, and make decentralized finance very, very popular.
Okay, thank you. So, so one of the big factors of the current model of money is what I would call it as a trust. Okay, so when I walk into a bank, if I hold a 100 rupee note with me, that's like, yeah, I know that I will get services or equipment or value to the tune of 100 rupees. Now let's look at that from a Bitcoin point of view, where I don't hold anything. Okay? So traditional finance has earned the trust of many people through capitalized financial institutions, law firms, RBI, government, and many other bodies who have come forward and said, this is how we work, this is how our money, this is the money that you have, will give you everything. How does trust prevail in a decentralized finance, which is synonymous with non-custodial finance and aimed at disintermediation? It's like
Okay, I
distributed
think
everywhere.
this is a very, very valid question, and this is always asked of how much like in the beginning of e-commerce, you make a payment,
Yes.
and whether you will get back the money or you will not get back the money, what is the refund, and so initial days these questions are, but DeFi has a DNA that all events of trust are enforced through smart contracts, as I told you, which verify the trust factors that are inherent. Let us say that let us say that you decide to float a bank, or you decide to take deposits from someone.
Yeah.
Now, how the bank is constructed? The bank is constructed that there is a reputation of the promoters. There is minimum required equity that is there in business, and leverage, whether it is through Basel Committee or whether it is through RBI prescription, that whatever is the asset side of a bank, that is also controlled. Now, these must be enforced through smart contracts instead of anybody coming, because everybody, it is so transparent. And contracts, smart contracts are looking at all the aspects, and everything is coming into a smart contract. So let us say a bank has 5 depositors, and let us say it has 5, to simplify things, let us say a bank has 5 depositors and it has 5 borrowers. Now, depositors want to be sure that this bank is solvent. So, what is solvency? Solvency is enforced through, by prescribing high quality liquid assets, as we call it, HQLA. We also, prescribe that minimum statutory liquidity ratio and cash reserve ratio. And we also periodically enforce the quality of the loans and enforce the bank and enforce on the bank the need to provide for these loans from their own equity, so that the depositors' money remains safe and the banks do not go under, and the quality of the disclosure and compliance remains high. Now, in case of a DeFi, all these, because these are basic functions of trust. How trust is perceived today, there is a centralized agency called Reserve Bank of India, or there is a centralized agency called Management of the Bank or Treasury of the Bank, which are doing these functions, because common people do not have the ability to see this. And we will come to autonomous organization. There are no autonomous organizations which are essentially software entity, virtual entities, which will bring out the exceptions and enforce contracts on them. It is not that, it is no more possible, like in a centralized banking world, that a bank is engaged in shenanigans or bank is doing misdeeds and is able to hide it, is able to hire accountants who will give a cooked up report, is able to hire rating agencies who can show some amount of forbearance. In the smart contract world, if A event is triggered, B action will be automatically triggered.
Yeah.
That means if there are 5 depositors and 5 borrowers, and out of these 5 borrowers, if 2 or 3 borrowers have not serviced their loans or have not paid, the mediums may be, stable coins, pegged coins, whatever may be the tokenization or whatever, but the trigger will automatically come that the license will get cancelled, or further deposit taking will be cancelled, or the 2 other loans will be liquidated, will be transferred to somebody else, and the collateral value will be immediately taken and will be paid to the depositors. To that extent, by reducing subjectivity, by increasing speed, by almost eliminating discretion, except when it is programmed discretion, that the system will work.
Right, sir. So thank you. So that's the element of trust that we talked about. I want to take up a couple of questions, sir. So I have a question from Mr. Pushpendra Khandelwal. He asked you a question, sir. Sir, just like loans, as you explained, will it be applicable for deposits also?
Yeah, I think just now I also told about deposits. So
Yes.
Deposits when it is given to the bank, depositors are giving a loan to the bank. So
Right.
So it will be enforced as if they are lending to the bank. So the bank's own collateral, the bank's own equity, all will be converted into ether or whatever is the medium, ether or DAI. Time permitting, or I'll try to give you my presentation, because as I told you, in a period of maybe 50 minutes or 1 hour, it's very difficult to give all the things, but I encourage all of you to go forward. And it is fascinating reading the possibilities. I know that all of us probably will be a little skeptical, little cynical, because for any new thing, the first thing is that, when any new innovation came, the first is being dismissive. No, this is a fad, this will go away. After that, there is a reluctance, acceptance. And many times, unless we are at least careful about the reluctance, acceptance stage, then it becomes very expensive to change the culture of the bank and change the technology of the bank. Because one thing that I need to mention here is that I know the amount of resistance that I got when I started doing some blockchain experiments in State Bank of India or in Syndicate Bank. And but experimentation is like the opium of the masses. Unless you experiment, unless new things happen, people will get easily bored, and especially the millennial generation. So coming back to the question, I think the deposits will be equally dealt as if the deposits are being lent to the bank, and anybody can take any amount of deposit, and provided the rules of the banking, as I told you, minimum liquidity ratio, minimum high quality liquid assets, disclosures, all these, the compliance as a stack in DeFi is a separate discipline. There is a lending thing, there is a payment thing, there is a compliance and due diligence. There is a separate group of people who are engaged with this.
Thank you. Thank you, Mr. Khandelwal. I think very good question, but I think we had answered that yes, it's possible to have deposits, and I think sir has also now explained to you. We have not a question, more of an observation from Mr. Prabhakar Kaza. Good morning, Mr. Kaza. He's from London. Shows the interest, at 9:30 in the morning, he is logging into our show, which is a good thing for the show like this. It means it means a lot for us. Sir. Thank you. So his observation is that Bitcoin is like shares in companies with fluctuating value. The aim is to keep the identity of funds confidential and away from the scrutiny of the government on whom we are dependent on geographical, food, and financial security. Can't believe that persons with hard-earned money would crave a bit or would crave a bit coins whose value fluctuating from $10 and $1,000 in Jan to $2,000 in December. The global money laundering is $1.5 trillion, except facilitating these crooks and criminals. Never heard a single statement how it benefits the common man. This is observation, sir, which is
No, I think
ex-CEO of
it's a
State Bank
valid
of London.
observation. I think the last slide that I showed, it shows that whether it is Hawala. But I think let me address this right away, although I could have told it a little later.
Yeah.
You know, the transactions in the DeFi world is generally based on what we call stable coins or stable tokens or whatever are the intermediary. And stable coins are three types. There are stable coins which are pegged to bitcoins. There are stable coins which are pegged to what we call fiat currency. There are stable coins which are not pegged to anything. So let us say you are tokenizing a piece of real estate, which is, for larger part of the audience, it is 1 crore rupees in real world. So 1 crore rupees, if you are tokenizing it with bitcoins, or there are, as I do not know whether you are aware that the Bitcoin is the first cryptocurrency. There are many other things like Litecoin, Ethereum, Ripple, Omni, Next. There are many coins. Every blockchain platform has its own version of the cryptocurrency. So you convert or you tokenize whatever is there into a what I call a cryptocurrency. Now, against this cryptocurrency, you can go and transact on the DeFi world, or you can decide. Ethereum is different from Bitcoin because these are programmable blockchains. I know that I deliberately try to avoid from getting into the technical issues or the technicalities of it. But let us say that we want that this 100 Bitcoin or 100 Ether or 100 Litecoin is to be converted into a fiat currency. Fiat currency are currencies which are issued by recognized central banks, which as per fiat, as per gold standard, or as per companies, as per the government's reserves or the GDP or inflation targeting, it issues currencies to a particular level. It is not that unending. If the government starts printing money, or what is in today's parlance known as quantitative easing, asset side and liability side is increased, and currencies are circulated, or digital money is credited to the bank's account, then there will be runaway inflation and the countries will come into their knees. So it doesn't happen. So if the fiat currency is pegged, then it becomes more so, credible. Third is that, absolutely the tokens are not pegged to anything. Tokens, your asset. Let us say you have a fixed asset which is situated in the X area where prices are all well known. So in that case, it will be tokenized into housing units. Today, I wanted to tell a little later again, today there are file coins. Can you believe it that all of us in our computers have spare processing capability and spare file space? We hardly utilize 20%. Like the Airbnb, there are software which are pooling this spare file space and making it available for community for use and return back. So new, property coins, new coins in the blockchain world, only thing is that it should not be a rent-seeking or a confidential activity which will raise corruption. which will raise inefficiency. The greatest advantage of blockchain is that immediately it is notified to all the blocks that this is the transaction, this is the tokenization which has happened. And from there it goes forward.
Okay. Thank you, Mr. Kaza, for the observation and the explanation that Mr. Mahapatra has given. I have before I take an audio question, can I ask, so Harish, just hang on for a minute. So we talked about trust, okay? And let's look at the, which are the companies who are writing the rules of DeFi? What are the core elements of DeFi architecture that will make banking and financial services available on tap? Just like RBI writes everything for us right now. So what is the underlying rules that are coming out and who's doing it?
Okay, I think there are several things which are happening, and I think I will again share a slide which will give you if you can see this, the traditional banking and financial functions that we see are divided into an aggregation layer, application layer, a protocol layer, an asset layer, and a settlement layer.
Yeah.
And all these, are done, these are known as what we call the financial primitives. Again, forgive me for being whatever you say, because this is a futuristic subject. There'll be a little bit of technicality involved, and it is no rocket science. I think there are enough material available on the web. There are, when I met Mr. Davenport, who is the Canadian blockchain, I was on a visit to attend some board meeting in Toronto. That time, he knew that I was doing some kind of experiments in State Bank of India in blockchain. So the Capgemini guy who was around and knew that I was there, so he arranged a meeting. So we had a breakfast meeting where he was mentioning that understanding financial primitives is essential in understanding, how the financial infrastructure is rejigged. The primitives are nothing but the elements of finance. And these elements of finance, and what are the centralizations in finance? Because centralization is happening at the aggregation level. That is, people are aggregating money to lend. It is a bank. People are, aggregating data to do, finance. Again, this is also an aggregation. You have applications, you are a software provider or you are a cloud provider. Protocol layer is where, there are exchanges, there are regulators, there are derivatives which are regulated by the SEBI and all. There are asset layers and there are settlement layers. Now, all these layers need to be, migrated, componentized, and these needs to be migrated to the new layer in order that at the simplest level, this can go to a blockchain level. And the building blocks is that each one of them is offered as a service, banking as a service. So understanding financial primitives, use of smart contracts, which are nothing but decentralized apps and nothing but interacting smart contracts, as I told you. And taking them and devising protocols, which are again SOPs, which are commonly agreed by everybody, and making building blocks. As of now, this is the decentralized finance is built around this. And if we look at, these are the various decentralized finance market players who are working on various spaces. As you can see, there are very large number of players who are working on this, and a lot of interest is also visible on this.
Okay, let's take an audio question. We have a very regular participant, Mr. Prabhu. Prabhu is a very experienced banker. Prabhu, can you unmute and ask the question?
Sure. So good afternoon, sir. Currently, if I understand, all financing, especially commercial banking financing, is essentially bilateral, right? The lender to borrower or a club of lenders to a particular borrower, like as in syndicated finance. But if I understand what you said is that, the difference in decentralized finance in essence is essentially like, what is in investment banking when you go and, price an IPO, etc., where you do a book building and price discovery. And, that determines the financing, which is like a marketplace, right? So decentralized finance is already existing in investment banking. And the only thing is that the means of delivering that is probably, from blockchain, etc., has to be adopted. So are you saying that, that a bank essentially, which plays the role of a classical, going forward, will play the role of a classical intermediary like that of a marketplace, rather than any sort of an assurance that a bank evokes in the eyes of the depositor? Today, when I deposited money with the bank, I, get an assurance that, this bank is holding like a fiduciary responsibility. So that's what my question is. Is it correct or?
No, I think you are largely correct. But if you look at international banking, again, those of you who are interested, I have a 7-minute video in my YouTube channel in which I have told how the big four, the Citibank, the Wells Fargo, the JP Morgan, or the Goldman Sachs came into being because predominantly they had four capabilities. One is a secure messaging capability. Second is the secure payment and payment capability. Third is the trade finance capability, that is across the borders they can, originate and settle trade. And fourth is fundraising capability, the networking that is required to raise large amount of funds for projects. Because in international banking, so what happened was that for communication, for everything communication is required, whether it is a settlement, whether it is a payment, whether it is a clearing, whether it is an international trade. So SWIFT came into being, where, in a secured manner, I remember the ways of the telex when we were young officers in 80s. Every time a message has to be keyed into telex, and a check signal has to be obtained from whoever is the check signal holder, and the check signal has to be affixed, and check signal has to travel in two different modes so that it is not hacked, and the same check signal apparatus must be there at the recipient. So this imparting of trust became expensive, as well as it caused delays. Now, this when SWIFT came, based on pre-verified credentials of the maker, checker, and the verifier, the messages went in standard formats, in encrypted formats, and these were decrypted and acted upon. Many times, after the incident in the Punjab National Bank, straight through was made mandatory. Now, if it is straight through, then the messages will be decrypted by the system without any human touch. They will get and go and get credited as part of the settlement. So communication method, which was very, very important. Now, imagine if there is a blockchain or a decentralized finance. So these things will automatically, depending on the key pairs that you have, whether you have a private key or you have a public key, and those key pairs will, depending on how you want to distribute, simultaneous notification will happen to all the blocks. So the user becomes more powerful. It is not necessary that the settlement will happen only in US based on a US clearing bank. If again based on another smart contract, the trader wants that this money should be converted to Japanese yen and should be credited back to his bank account in Daiichi Tango Bank or whatever is the Japanese bank, then it is all based on smart contract where there will be a hunting facility. No more intervention is required. the money will flow there. Now, similarly, if going forward, right now, of course, it is very, unless you know both banking and technology, probably appreciation of the things will take a little bit of time. But as I told, it is no rocket science. What we have to understand is that if on the appropriate blockchain platform, the providers of finance, as I told, raising of finance made the world's biggest banks big. And the challenge for that, which is coming from the BRI or the Belt and Road Initiative of China, is predicated on that. How you can get a big check from institutions, from banks, and make it available for project funding. And all this is possible. Blockchain has the capability, and the programmable blockchain, the initial blockchain initiative, which came from as a Bitcoin, it was a simple thing, it's unprogrammable, it was done, it was a single trick pony. But today the blockchain movement is raising its head in a very, very big way. And going forward, whatever you are telling is right. The trust will be enforced by the system. The transactions will also be optimized and very, very cost effective on a blockchain platform. That is the essence of DeFi.
Thank you very much.
Thanks, Harish. Sir, anything we talk about technology and anything future is all about a technology layer on which stands. So obviously the a subject that will always come is on the cybercrime. So cybercrime criminals target financial services 300 times more than the other sectors. PwC analyst says that 45% of financial intermediaries, such as money transfers and stock exchange, suffer from serious cybercrimes every year. Is DeFi a way out of cybercrime menace?
No, in blockchain language, I will not go into the details because this is a discussion on DeFi. I think I will tell that most of these vulnerabilities come because of what we call a single point of failure.
Yes.
I used to always tell that, the Third World War will be fought in the cyberspace because to defeat India, you will have to hack, only 3-4 things. You'll have to hack NIC, you'll have to hack State Bank of India, you'll have to hack the healthcare system, 3-4 things, and the country will come on its knees. So this single point of failure or the centralization of these things, all the government data is in the NIC servers. 30%, or if we take 3 or 4 banks put together, 70% of the banking is there in these 4. So there is too much of vulnerability because there are single points of failure. In case of a blockchain or in case of a decentralized finance, these points of failure are completely decentralized. Because data is replicated in all the blocks simultaneously, transparently, available to everyone, and programmable by authorized people. So what will happen is that if one node is hacked, there are multiple other nodes which will come and immediately replicate that node within themselves. So cybersecurity is one of the key things which is addressed in the new DeFi system.
Thank you. Final, come to an hour, almost past the 4 o'clock. My final question to you is that what's it looking like ahead? What's the future of DeFi?
No, future of DeFi depends on primarily on how the blockchain technology or the Bitcoin technology. I think again, let me share how different countries are looking at it. So if we look at, you are able to see this?
Yeah.
You are able to see the presentation?
No, sir.
No, not yet. Okay. So
Yeah.
You can see it now?
Now I can see. Yeah, yeah.
Okay,
correct.
if you
Yeah.
look at the regulations, that will define DeFi. If you see from various things, if the dark green represents areas where the regulation is very, very tight. And yesterday, in fact, I was discussing with my son, what does it mean? Does it mean the tight regulation? Does it mean that they are preventing DeFi to come in? I think he had a point of view, which I also agree, that areas like Canada, areas like China, or for that matter, Bolivia, or something which are very tight on cryptocurrency regulations. Grapevine says that they are very advanced into evolving their own blockchain or their own Bitcoin. So they don't want that there should be public blockchains, because the other areas which are very light, for example, US or India is medium light, or Russia, probably they are advanced into blockchain, and they want, like, after the trade embargoes are over, everybody wants the trade liberalization because my country is good. So similarly, I think the evolution of cryptocurrency, and the other thing that I wanted to tell is the central bank digital currency, because that is a precursor to what we must see, because people must be used to fiat currency or bank notes, and the deposits which are not necessarily notes, but it is in digital currency. Those must converge well, and those must be very, very fungible, in order that what we call the DeFi world should come. But central bank digital currency, I think, is going on well. And what we are seeing is that a lot of new initiatives are coming. And I believe that going forward, it may not be immediate, but all these things like DeFi will be a hockey stick. The inflection point may be a little, but once it takes off, there is no stopping. So I believe it is incumbent on all of us to understand and appreciate this concept, because this is an alternative which is coming up, and banking will be richer. Like all of us know that virtual banking is something with which everybody is experimenting. So we will have to look at this also.
Thank you, sir. Thank you very much. So, ladies and gentlemen, I would at this point want to wind up the show. We have passed the 4 o'clock show. That was a fascinating discussion with you, sir. Absolutely fascinating. And I think, like me, I'm like really hungry to know more about the DeFi. I'm sure many of the audience would love to know. Is there any reference books or points that you would like to leave with us, sir?
As of now, books have not been written, but you can read the basic blockchain books. But otherwise, most of the resources are on the web. Books have not been written, but there are books on blockchain. But blockchain books also, this is something which, as I was doing my preparation for this, what I found was that the blockchain books speak about the blockchain as a technology. But DeFi, which is aggregation, I think there are a number of resources on the web. There are DeFi consortiums which are bringing white papers. I think those are the ones which I will refer.
Yes. Okay. Thank you, sir. So, ladies and gentlemen, we come to the end of this DeFi show. A really fascinating subject. I think there's a lot to learn. This is bound to come. Someday or other, the DeFi will come. Business and governments are also excited about the potential for digital currencies to increase economic inclusion and reduce financial crimes. However, regulators and governments must see a compulsive need to implement DeFi. I'm sure they will find a way. Times have progressed from what we were. Like Sir has shown us, from the barter trade, we have now come to a digital economy and digital money. And so Bitcoin is not too far. It will happen. Thank you, sir. Thank you very much. Please, ladies and gentlemen, join me in thanking Mr. Mahapatra for a wonderful discussion. Lots of things to learn and something for us to study and become more aware of what's coming tomorrow. Thank you, sir. Thank you very much.
Thank you. Thank you very much. All the best.
Thank you, sir. Thank you. Ladies and gentlemen, before you leave, tomorrow is one of the biggest days for the country. India celebrates the 74th Independence Day, and so are we. In our own way, we'll celebrate. You will be happy to know that tomorrow we are having a very special guest from the police forces. He was one of the top guns or top cop that Maharashtra has ever got, who played a big role in cleansing the anti-social elements from the city and maintained peace of life for every who is living in Mumbai. Let's meet ex-DGP of Maharashtra, Mr. D. Shivanandan, who has been portrayed by quite a few Bollywood films. He has been, in different forms. He himself will be here tomorrow. And as we wind up the show, we will show you a small video. So bye for coming to the show. Have a great evening ahead. Thank you so much. Look forward to seeing you all tomorrow. Bye-bye.